keeping it with HUL, we have with us Naveen Trivedi of HDFC Securities joining in. Naveen, HUL profits have largely met analyst expectations, aided by a double-digit growth in sales volumes, which more or less was expected, right?
Yeah, both 16% and 12% volume growth was in line with our expectation. Even the margin expansion of 185 basis was in line with our expectation. I would say operationally, since last 2-3 quarters, HUL's performance is far better than the other mid-cap companies. And even this quarter also, the double-digit growth was very encouraging. But largely the numbers were in line.
Management sounds a little concerned on back of rising crude prices, or rather uncertain crude prices, and they've tried and made themselves clear that currency-led inflation and crude volatility are the key risks going ahead. Do you think this could be a concern for HUL? I know this quarter was largely about a low base effect and of course GST transition, but going ahead, how do you think the management will have the ability to, of course, deal with the little near-term concerns that they have?
So last year, if you remember, the GST rate division has already given them a question for a price cut. So that way they have already taken a price cut last year. So we have seen many categories have seen a deflationary scenario last year. However, what we see that although input inflation are rising, we believe that these companies have enough appetite to take a price hike. And I think 2 to 3% price hike would be sufficient to pass on the inflation. So I don't think so. It's a big risk, I would say. A company like HUL can easily sustain the healthy margins going ahead also.
Right. So do you think it has bottomed out for HUL? And also, what do you think the key drivers are going to be for the company going ahead? Largely, would you be looking to re-rate HUL post its earnings?
So, HUL was our topic since last 1 year. And we were keep saying that considering the challenging environment and GST destocking, we were expecting that the large caps, the category heads would continue to gain share. So that has happened last year. What we have done recently is that considering the stock is already up by around more than 50% in the last 1 year, and with the limited upside, we downgraded our rating from buy to neutral.
Right. Naveen,
yeah, sorry.
Please continue.
So we don't see any structural issue with respect to the growth because both rural and urban are doing well. Especially rural is picking up significantly. Many men are saying there is a gap between rural urban is around 3 to 4%. So the tailwinds are there, but I think with this price, I think most of the near-term recovery is priced in.
Right. Naveen, I have a question for you, and that question basically is margins are impressive, typically in the personal care segment and also the home segment. So if the margins are very impressive, the volume growth is looking quite strong, and there has been some inflationary impact also. We have seen that sort of basic impact coming through. The perhaps second half again could be seeing some contribution here. Looking at that, looking at the improving return metrics, and as we know, HUL enjoys negative working capital. So what's your own perception? Will the current multiple sustain, and how much outperformance perhaps just based on the margin sort of expectations is still at present pending for HUL, or everything is priced in for the second half?
So considering margin, we already built around 100 bps margin for FY19 and a similar kind of a margin expansion for 2021. So we're expecting around more or less 300 bps margin for the next 3 years, considering the premiumization and the operating leverage which they can have. However, if you look at the last 3-4 quarters, personal product EBIT margin was subdued because investing a lot with respect to the investment. So the margin profile has been lower for personal products.
Naveen, I'm just going to move on from HUL and ask you about Marico. What is it that you're doing with Marico? Because we believe copra prices are down nearly 20% from the start of this year, which is the key raw material for Marico. That, of course, is reflected in the stock to some extent. Credit Suisse recently upgraded the counter too. Internally at HDFC, what's the word on Marico? Is it a stock that's looking good? Do you think the worst is behind them?
So, since last 6 months, we upgraded our rating for Marico from neutral to buy, and we were saying that the most of the headwinds which the company had witnessed in FY18 will be behind in FY19. So, like you mentioned about the copra thing, which is a key raw material for parachute, the inflationary scenario we believe that will not be in FY19 and first half of FY20. And rather there will be a deflationary scenario. So during this period, company can retain and expand the gross margin, which we have seen in the early cycle of copra also, that whenever it goes down, the parachute price cut also happens gradually. So that way company can expand gross margin. So our take is Marico is our topic, and we are bullish now on the mid-cap space. So Marico is our topic, and we are bullish now on the mid-cap space. So Imami, Marico Tower, we are more bullish on mid-cap space in FMCGs.
Thanks, Naveen. Good talking to you this morning. More bullish in the mid-cap space. Marico is HDFC Securities stock pick, is what they're telling us. Well, but of course, the focus this morning should really be HUL. They've posted numbers which are more or less in line with street expectations. We'll take it through the brokerages have to say. So, Prabhudas Lilladher has actually increased their price target on HUL to 1703 from 1627. They've cut the rating to hold from accumulate. They said no surprises to justify valuations, and they expect a reduction in cost and expansion in margins going ahead. They've said that the key challenges, which is pretty much what the management has also indicated, is the fact that crude prices continue to rise, weaker rupee is not supporting the setup either, and competition from select categories. JM Financial has also maintained a hold rating on HUL. Their target price stands at 1550. They say there's been no positive surprise from HUL this time around, and another strong quarter, but somewhat par for the course. They also say that they expect the reaction to be fairly muted when the stock opens up for trade. Well, that's what brokerages say, but here are what the management says, because they remain confident of maintaining the strong growth ahead. And of course, this is what they said after they posted earnings late evening yesterday.
Our comparable domestic consumer growth, which is like for like, after eliminating the accounting impact of GST, grew at 16% with underlying volume growth of 12%. Looking ahead, we expect gradual improvement in demand. Crude volatility and currency inflation are key watch-outs. Also, in the near term, a step-up in competitive intensity is anticipated. Our focus remains on volume-driven growth and consistent improvement in operating margins. Our strategy, therefore, remains unchanged: consistent, competitive, profitable, and responsible growth.
Right, those are, of course, comments coming in from the management of HUL highlighting why they are so confident going ahead.